Helima Croft, RBC Capital Markets, global head of commodity strategy, is with us, also a CNBC contributor. So much to talk about, Helima. Merry Christmas. Good to see you. I like that red.
Merry Christmas, Joe.
Yeah. Yesterday, we were talking about whether we're at a level where the producers are not feeling that great about the holidays.
I mean, if you look at the Dallas Fed surveys, the U.S. producers do complain about the price environment, some of the issues around, tariffs, aluminum and steel prices. But they do like President Trump's deregulatory agenda. They do like the permitting reform. They do like the aggressive efforts to, assist in terms of everything they want on the deregulation front. So the question is, U.S. production has remained high. Will it plateau in the current price environment for 2026? I mean, a lot of things broke President Trump's way this year. Not only was U.S. production high, OPEC, particularly Saudi Arabia, gave him, significant amount of additional production. You also had production coming out of Brazil, Guyana. So it was a very strong oil growth story for 2025.
Do you, I know you got a great job. I see you, you get sent all over the place by RBC. You're, in Vienna, and then, you're in the Middle East. I mean, it's all domestic now. Is that hurting your travel? We're the swing producer now, aren't we?
I was just in Europe. I have been in Houston, so I do spend a lot of time in Houston. I like it a lot. I do think the question for President Trump is, if you have prices move a leg lower from here, it's not our expectation. We do expect WTI prices to hang out sort of in the mid to high 50s this year, barring a major political disruption. And we should talk about that as well. Is that a growth number for U.S. producers? It is not an optimal number for U.S. producers. Can they weather this price for about a year? Yes, but it's not what they want in terms of a medium or long-term oil price, to be sure.
So where is it? Is it Venezuela? Is it Iran? Is it Ukraine? Is it the Middle East?
We have so much to talk about, Joe. First story would be pay attention on the Venezuela story. Now, you could say Venezuela is not producing that much anymore. I mean, when I used to cover Venezuela back in D.C., they were producing about 3 million barrels. And that was like the early 2000s. The question is, if we do get some type of regime change in Venezuela, is that key to unlocking future Venezuelan oil production? Can you turn around the story quickly? It's going to require, Joe, about $10 billion a year in investment. We will need a very stable security environment in that country. It has been run as a narco state. There's a lot of arms in circulation. The military essentially runs an oil company. Are we going to go in and stabilize Venezuela? And if we don't, is there some risk on the current production levels in the near term? So pay attention to that story. Pay attention to the latest in terms of Israel, Iran. We have news out of Israel that Prime Minister Netanyahu is going to try to lobby for more aggressive action against Iran because of the ballistic missile program there. The 12-day war over the summer did not produce a major supply disruption. Again, something that broke President Trump's way. If we do get another Israel, Iran, U.S., conflict, is that going to remain the same? Is regional supply at risk? Again, it worked out well for Trump. But then there's a Russia story. There has been expectations in the market. Part of the reasons I think prices have been soft, that President Trump will be able to deliver a deal to end this war. Not clear yet if that's going to happen. And Ukraine has upped their tax on Russian energy supply. So pay attention to the trajectory of Russian production.